Well, ET now caught up with Keki Mistry, who's the Vice Chairman and CEO of HDFC Ltd, to understand the impact of the COVID second wave on economic recovery as well as on the housing finance sector. Speaking exclusively to ET now, Mr. Mistry stated that during the first wave, people were skeptical about the pace of economic recovery. However, post the second wave, he does see that the economic recovery has been slightly faster than what people were expecting. Since June onwards, we are seeing pickup in economic activities, and with each passing month, he believes that the momentum of the recovery is only accelerating. The impact of the second wave on the economy has been slightly much lesser than the first wave. However, he did mention that yes, we need to be mindful of the risk of a COVID third wave, and depending upon how severe it is and when it comes, it may have some bearing in terms of the overall economic recovery. Mr. Mistry stated that speaking about the impact on the housing finance sector, COVID has only made it more necessary for people to look for bigger homes. On the growth front, COVID in fact has proved to be fairly positive for the overall sector, and he believes that the average loan to value ratio is extremely low right now, and although there is some impact in terms of the collections, he does not see a huge long-term impact on the collection front, as COVID has only accelerated the demand for housing. March 2021 disbursements level peaked at a record high in company's history, and since June onwards itself, they are already seeing an incremental pickup in the disbursements on a month-on-month basis. He also believes that there isn't too much of a material impact of COVID, at least on the salaried class. The affordability has been the key theme playing out with record low interest rates, and India is led by a young population, and he believes that the structural demand for housing only remains strong. However, in terms of the lease rental discounting portfolio, he does not see too much of a significant impact, but probably some of the players are, for instance, the malls, etc., are seeing some pinch there. Speaking about the interest rates in the economy, Mr. Mistry believes that RBI is unlikely to raise rates if the third wave hits India, and he does not see interest hikes in the upcoming 4 to 6 months at least, and we should be mindful of the third wave. And do note that RBI has already stated that they would be maintaining an accommodative policy as long as necessary, and at least so far RBI has been giving a priority more towards growth versus inflation. Will they be able to do or not going ahead needs to be watched out for, as inflation, of course, rather the inflationary expectations have certainly risen higher. Lastly, Mr. Mistry also stated that he does not see too much of a disruption in the housing finance sector on account of the fintech, while we are seeing good amount of changes in the overall financial industry itself in India, because on one hand we are seeing PSU banks being consolidated, on the other hand there is also a lot of fintech players that are disrupting the entire system, and also we are seeing some of the NBFCs also becoming larger and also putting a lot of focus on technology adoption and fintech, and hence the entire financial landscape itself is up for change, and the Reserve Bank of India has already guided that probably we may see another hybrid model of finance coming in over the next few years. Having said that, Mr. Mistry stated that he does not see fintech to disrupt the housing finance sector, at least the housing finance sector, because there is a need for the brick and mortar presence, at least in the housing finance sector. And he also stated that in terms of the insurance, he foresees structural demand has only increased the need for insurance, be it in life as well as the health insurance post-COVID.